Hello everyone, so US30 recapping the 12th of September, here we are. I've done a picture for this one. So this is PPI day, New York session, big moves. We're going to go over that now. So there's all the chart labelled up on a 5 minute time frame. Let's go to the chart. So that's the higher time frame. So we want this one here. And we go down to the 15 minute time frame, that'll do. So first of all, you'll examine the previous day, like always, like every video we've done. We examine the previous days to have a look where the New York traders are buying and selling. Previous day is here. New York traders pushed down and then continued to buy, started to buy down here. So this is a discount buy area. Haven't labelled that up. And they continued to buy all the way till close. So there's no premium sell area. Just a discount buy area down here. So what you'd be looking for going into today is more support towards the upside. So your bias would be a clear bullish sign to target more buy side liquidity. So then we label up a potential retracement area, and we have this area here. So this is your consolidation that caused the fake out down, which then they started to buy at. So this is your consolidation area, accumulation, whatever you want to call it. And we also have the CPI level in there, and you have the New York Open level. So you have a lot of areas, you have a lot of levels within that consolidated area, and it's also a breaker if you follow ICT. And this area would be just a big area labelled up with all the levels. So you have the New York Open, CPI, and you drag that along. And then you have the grey area, which you're looking for this bullish support to come from, would be the top of the wicks down to the bottom of the wicks here. And that would be your rough area you'd be looking to get retested. And that's why we drag that along like that. And that's just an area you're looking to use as bullish support. You would need to be looking at the smaller time frame to get into the trade. Now we go to the 5 minute, and we can go over each entry. So here you would London session. What you'd be looking for there is some sort of retracement. So you'd be looking for a retracement in the London session to continue to buy on the New York session. So if we zoom in, this is your mop. Pre-London up here, London opening. London opening takes place. You don't really have a setup of the London opening because price has gone up here. So the first trade you'd be looking for is this liquidity grab here. So this is a previous high liquidity. London open pushes up, takes that high, and then once you start to see rejection here, that's an opportunity to sell back towards the London opening at least. So stop loss at the high as always, and you start to get in on one of these candles here. As price comes down to here, you would have moved to break even and took partial profits as it comes down to this area. Then you would expect price to either find bullish support from here to go up, or break through and give a little retest and continue down. But the main area to look to trade would be this sell from here. Price come down all the way just above the London opening. You start to see resistance kicking in there, and you see that as bullish support. On the push up here, you could have got into that and seen that as a buy trade for a continuation up. So sell from up here, buy from down here, and then price goes sideways. You wouldn't really be looking to get into any other trades. By the time this area came, you'd have moved to break even. And then you move into PPI news, which is here, and then the New York opening here. So we zoom out and we examine exactly what's going on. So these are previous day highs, past daily highs I mean. So you can see the PPI took place, pushed up, took the liquidity, then started the downwards move. We're still expecting that retracement. So as price pushes down, we then find bearish support off there. You can see price pushes down a bit more, but your entries would have been up here somewhere on the rejection. Let's say you didn't get that and price you waited for the New York opening here. We zoom in, New York opening takes place, wicks up, retest the PPI level, then starts rejecting. This is a good bearish setup, so we're retesting this area, already in sales from up here. Now you're in sales after this rejection. So let's say around here you got into the sales. Price comes down to the New York opening, you move to break even, and then price starts to push down from there. You can see here, pushes down, retest that, and continues down towards the downside. As price moves down, you move to break, take partial profits. Now this is the interesting bit. As price comes down, all we're doing here is pushing down to a discounted price to start buying at. You can see here we're taking liquidity from here, and we're starting to touch the grey area here. We just about touch it there, and then we get a nice bounce off to the upside. So some people got that, some people missed it because they were waiting for it to come down towards this level here a bit further. But we got started to get rejection early, because all it had to do is come down to touch a liquidity pool or a key level, then you get the reversal. But all it's doing is pushing down to a discounted price. So you'd have to be examining the candles. That's why I focus on the 1 minute and 5 minute and look for reversal structure to get into the move, because so you can use a nice tight stop loss, and then you manage it how I explain. Price comes up, retest the New York opening level. Obviously you can see this as a sell on this rejection in case we continue down. Price then goes down, by this time you'd move to break even and take partial profit. So even if you bought here or sold here, you would have made profit or moved to break even at least. Then price goes into a consolidation, and then that's when we get the injection towards the upside to break the New York opening. And that's when it continues towards the upside. So this template is New York opening takes place, pushes down to a discount buy area, takes liquidity, retests key level, then starts the buys to follow the higher time frame bullish bias. And that's most of it from there. You took partial profits as it clears these highs up here. That's just a rejection to retest the mop. Doesn't always do that, but that's just a good thing to show the strength of the trend. If it comes back and retests them up quickly and then continues, it shows bullish strength or bearish strength if you're going downwards. But that is 12th of September. Main trade would have been the buy from here. I know that's what I was focusing on. That's what I took, and it was a nice clear buy for the New York session. Now let's move on to the Friday the 13th. Hopefully that makes sense. Message me if you've got any questions. Links are in the video description.